Hi guys, I'm Jeff Jr. from Trajan Wealth, and this week I'm talking about politics and your portfolio. With only 3 months until the presidential election, perhaps you're wondering, does the stock market's return during an election indicate the winner, regardless of the president's political party? Or, heck, does a presidential election even influence the stock market at all? I want to help clarify what happens to stock market performance when a presidential election is on the horizon, which it is. In the next 3 months, we'll see a lot of political ads. I'm sure you're sick of them like me already. But being observant of what is happening in the stock market may give you a sense of this year's election outcomes. To understand how a presidential election influences the stock market, we need to look at past historical data and the link between the S&P 500 index returns and the U.S. presidential election outcomes. However, as we say in the wealth management industry, past performance does not guarantee future results. It is interesting, however, to look at what has happened in the stock market leading up to each presidential election. Over the last 60 years, from 1956 to 2016, there were a total of 16 elections, and the S&P had positive returns 14 of the 16 times. Also noteworthy is that the S&P 500 index average return for all election years was 9.8%. Now let's dive a little bit deeper. The average return was higher during an election year when a Republican was elected, 11.8%. When a Democrat was elected, the index return was only 7.2%. What seems to have a significant bearing, though, on the election outcome is the stock market's performance before the election, the year before and at least 6 months prior. Here is what has historically resulted. If the stock market was performing lower, a Democrat was elected. If the stock market was performing higher, an above average return of over 11%, a Republican was elected. It's even more interesting to see the stock market performance when there are incumbent candidates. When a Republican candidate is elected after a Republican, the index has performed very well with an average return of 11.9%. At the same time, when a Democrat is elected after a Republican, the average return is abysmal, negative 1.3%. Here's another interesting fact from the past election stock market performance data. The average index return in the year leading up to a change in the party that wins the presidential race is low at 5.2%, suggesting that the market may not be very supportive where there is a chance of the incumbent party losing the election. If the past market and election trends are anything to go by, a healthy market return before an election year could indicate and increase the likelihood of a favorable outcome for President Trump. Lastly, I want you to remember that your political views can lead to investing mistakes. What I have presented is past historical stock market performance and election data, and that should not be used to make your investment decisions. Be aware of your biases and do not try to time the markets ahead of an upcoming election, regardless of what direction they go. Additionally, do not let the latest economic data or political views sideline your financial or retirement planning. There will always be something new on the horizon. And remember that Trajan Wealth is here to help you stay on track, regardless of who wins the 2020 election. Until next time, I'm Jeff Jr.